So Asha, look, budget is over, bulk of the earnings are over, credit policy, frankly, expectations are not extremely high from the market standpoint. So you would say that, look, couple of days post credit policy is going to be back to basics, which is momentum, flows and technicals. And that I think is going to be the driving feature in next couple of days in terms of rest of the month for Feb. If you look at the month of Jan, the cyclicality was at play, which is that, or seasonality was at play, which is that historically the month of Jan has not been a strong month and 2024 was no different. Budget has come and gone. It has not moved the market mood at all. Banks is where the disappointment is. Reliance is where the leadership is. There is excitement in individual stocks. But I guess we are going through a market right now where the mood is very simple. If you deliver, well, markets will reward you. If you miss the mark, markets will punish you. Thankfully for us, FIs have sold, DIs have bought. So in terms of the construct of the market is very simple, which is that extreme pockets of momentum in the market are reducing. The market is getting very selective. There are handful of large cap stocks which are getting re-rated, but in general there has been no massive re-rating candidate or de-rating candidate apart from some individual new specific names in last 2 weeks or so.
Oh, yes, indeed. And it seems like now going forward, the bulk of the news flow seems to be behind us. But what we will be monitoring very closely is what's going on across the globe. And just to put it to perspective, in the US, you had the S&P 500 notching a fresh record high. On Friday, you had the likes of Meta that was in the spotlight. The Dow Jones as well added about 0.5% that was set for a new record close. The Nasdaq too comfortably in the green. And quite a bit of commentary as well coming in from the US Fed Reserve Chair Jerome Powell, saying that the central bank would now move at a considerably slower pace when it comes to rates, Nikunj, as compared to what the market was expecting.
Yeah, Aman, frankly, from a global standpoint, what really matters is that what is the directional rate which US Fed is likely to follow. And in that, nobody expected 6 months ago that, okay, US Fed is going to come out and, cut rates. But if Jerome Powell has pretty much said the obvious, which is a rate have peaks out, but they need much more confidence before they start cutting the rates. As of now, I don't think markets would panic. What markets assuming that the rate cut would actually happen in the second half of this year. US jobs data or the kind of reading which we're getting on inflation, they pretty much are indicating that there is more evidence to believe that a rate cut should be around the corner. The US 10-year, it did not see any kind of a sharpish movement. Look at the dollar index, 103. So I would say, excuse me, globally is pretty much status quo, and that is what really matters right now, that it is status quo in terms of the US tech stocks doing well, S&P trading with a positive bias, and in terms of the Fed communication, the inclination I think is that rates should go down rather than stay up.